Traders Live podcast.
Hello and welcome back to the Traders Live podcast. My name is Chogas. Joined with me today is my better half of the podcast. That's Marto. And we have a very special guest, our second one today, Beau.
Howdy.
Beau and I have known each other for a while now. He's an equities trader, and we sort of first found each other in the ASX day trade chat in Discord. We've had many conversations over a couple of years. I was just reflecting this morning. Beau, for me, he had conviction on a stock and a thesis that he had, and he had a 5-figure day off the back of that. And for me, that was a really good learning opportunity, and I've sort of taken a lot of his approaches to the market on board, and we are going to delve into all of that today, and it's going to be really interesting guy outside of trading as well. So we're going to get into everything. But if you're a trader that's still finding edge, you're still learning strategy, you're struggling with consistency, profitability, any of that, like Beau, for some reason, and I hope we get into this, just like has answers and can ask the right questions.
Beau knows.
Beau knows.
I've heard that. Well, mate, I've only just met Beau face to face. I've been obviously on Discord and Substack and whatnot, but I feel like I've known Beau for a few years, mate, and I can't wait to get into some of the your background.
Thank you.
Yep.
Yeah.
Now, I'm about to start your hour clock. I'm going to start that right about now. So feel free to do any trades that you please from now on. I know that for something different, we're going to go equities here. You've got FMG up. Talk to me about your approach for the hour that we have together.
Okay. My approach is somewhat similar to YOLO. That's the mentality behind it. But basically, just before we hopped on the podcast, I had a huge power outage, which hasn't happened before. So my 3 screens are turned off. I've borrowed my partner's laptop, and this is about the only thing I have access to make analysis on right now. So I thought, given the circumstances, I'd keep it interesting and go for the hero short on FMG, because that thing is straight up. And I will disclaim that this is not a viable strategy if you're looking to actually make money in the markets. This is absolutely a YOLO trade, but it should be fun. So we'll go with that.
Okay. So it's nothing how you normally trade. Obviously, we can get into how you do trade during the podcast. But yeah, for those listening at home, unless your strategy is YOLO, don't worry about anything that you're sort of doing today. And again, we're not playing for sheep stations. So yeah, it's good. Mate, tell me a little bit about early life really quick. I know that you are currently living in Newcastle. Can you give me what's the few minutes of who are you?
Yeah, okay. So I grew up on the outskirts of Sydney in a place called Beaus. It was a little country town, 20,000 people, sort of place where everyone your age knows each other. And yeah, I just sort of went down to the river there. We ran through the bush and we jumped in the ocean, and not the ocean, the river. And, it was very active growing up, and it was sort of doing acrobatics, trampolining, riding our bikes around. Shall we get into where we went after school, things like that, or shall we?
100%.
Yeah, okay. So after school, I sort of that cascaded, and I ended up training parkour with a few people. And about the time I left school, there was sort of workshops, promotions, video work that we were doing with parkour, and that sort of sustained me for 2 or 3 years. Following that, got into IT, did maybe 3 or 4 years there, and I was part-time doing videography and photo work. And since that point, I've moved into more or less full-time videography and photography, mainly doing real estate and also trading alongside. So I can sort of set my own schedule and block out that first hour and focus on the markets from 10 a.m. to sort of 11:30, where most of the...
Nice. Mate, I'll just quickly jump in. So I know you mentioned you don't normally trade like this, but just back to the trade. So can you give us a brief overview of why you're shorting against the market? Well, why you're trading FMG?
Yep.
Is that one of your go-tos? And why are you shorting against the market?
Okay, on a day like today, I haven't been able to check the last half hour of action. I haven't seen any news reports that have come out due to the power outage, but I sort of like on these days where not much is happening to find something that's in line with the market, something that moves with the index. And I'm just looking for either oversold or overbought territory, and then looking to trade in line with the index. So if something's showing that it's been up for 3 or 4 days consistently and it's given everyone a free ride to the upside, I'm looking for maybe a pullback if the markets can pull back. And I have you to thank, Marto, for that analysis, because I read your email this morning, and
Oh yeah.
looks
Oh
like
yeah. I was wondering if that was part of it, mate.
it was, yeah. So it looks like there's a good chance the market was going to pull back today. So I
Can
thought,
I ask a really silly question, mate? So what you're still mainly trading equities?
yeah, yeah.
Yep. So what you said there, just in terms of trying to pick FMG roughly tracks the market. Is it what's the attraction of trading FMG? I know you're looking at indices at different times, but
Yeah.
is there a reason why you kind of try and pick a stock that tracks the indices instead of the index itself?
Look, I've been sort of trialing trading the index itself for the last maybe 6 months. The answer is really it's just because it's what I know. I think you can see a little bit of relative strength or weakness in equities against the index, and maybe that might serve as a bit of a buffer, so that if you're wrong and the index starts to turn, you might have a little bit of a second there to bail out before you do some damage. So that's the first thing, but I probably intend to move more into indices as I carve that out and get a more consistent feel for it.
Yeah. Mate, outside of obviously the pressure cooker that is the hour this morning, what do you like? And I know that your trading has evolved so much over the years that we've known each other, but right now, where are you finding your edge in the market? Are you trading equities on an intraday basis? Are you trading swing trades? Like where's most of your capital and most of your time sort of focused at the moment?
Yeah, okay. So I guess it depends on the modality of the market. One thing that I think I went pretty wrong with when I started doing equities is just not recognizing when conditions change. I sort of had the intro through a few of those podcasts on Chat with Traders, which I think that a lot of Aussie equities guys do, with Bryce and Nick. There's some pretty legendary podcasts there, and you might have the idea that you can come in and buy a news release and be right or wrong pretty quickly and make some money. And the reality is that these guys mention that in the podcast and they're very good at it, but there's a lot of factors that go into that, and there's years behind them of reading the market. They're probably watching the indexes. I've read their reviews a lot over the years. I know that quite a few of them, Austin, watch the index and get a feel for where it is. So yeah, I guess that sort of buying the news thing is something that I try to avoid a little bit these days. What was the question? I'm a bit lost here.
What are you doing these days?
Okay. So if it's earnings season, it's very different to if it's not. If it's a bull market, it's very different. If we've got a bit of momentum, I feel like if there's solid momentum to the upside and it's not too overextended, I might be looking at your classic Kualamagi, can slim breakouts. So something that's gone up a lot, and then it's consolidated, and then you get the 10 and 20-day moving average moving beneath it. And you want to couple that with some fundamentals, and you want to couple it with understanding if the stock has book value or something like that. If there's upcoming news, or perhaps they're going to start production, if they're a mine or something like that. During earnings season, that sort of shifts a bit, and I'll be looking on the day to find anything that's drastically offside. So I'll bring up broker predictions. I'll bring up short interest and get an idea for where people are on this stock, and obviously the recent price performance. And if something is massively offside, they had good predictions on their earnings, and they've come in way under, and the market's generally been bullish lately, I'll probably look to capitalize on that panic and sell it. And the other side of it too is if the expectations are in the bin, and they've come out and they've done really well, I'll probably look for that moment in time when the crowd flips a little bit, and you just want to line that up with the market, and you want to line that up with price action and not jump the gun. You don't want to force your opinion on what the market should find important, which I think is probably a huge mistake that myself and many others made when they come into this. They're like, oh, look at this announcement. It reads fantastic. The market's going to care. And, it doesn't.
Mate,
Yep.
just quickly stepping back. So they're all, I guess, tools that you're using to come to a decision. But
Yep.
like from a new trader perspective that wants to trade equities, they're coming in, they've got, you mentioned technical analysis, you mentioned company earnings, you mentioned, fundamentals. All like, where do you start? Is it one of those things that, piques your interest and then you look at the next and that's your confirmation, or how does that
I guess
work?
so. I think if I was to go again, probably to understand this, I could give you an example of where I went in my first few months of trading. And that was just after the COVID gap where it sunk to the low and they started printing, the market started running again, and it was basically all the way up to highs again. And so it was around the time that ZipPay and Afterpay were making moves. And I'd see their announcements and I'd buy it. And, these were profitable trades that you just ride them up all day sort of thing. And I thought I was a bit of a genius, but come think of it, I was in at a really good time and I didn't understand that. And so if I was to start again, it would be about realizing where you are in that cycle. If we've got money coming into the market, if we're in a bull market, because that's going to drastically affect your ability to make money on news releases. There's a good chance that without these news releases, these stocks were still going up. So I was just in the right position. If I was to start again, I'd say top-down analysis, understand where we are. Like a good thing is just to have moving averages on your index chart, moving averages on your stock charts. Another good thing to do is just sort of scan relative strength. So particularly on the year, if it's near the 52-week high, it's obviously a strong stock.
And sorry, mate, you're talking about what's your duration of trading? Like you're not talking about holding for 10 years. You're
No.
what, days, weeks?
Yeah, if it's sort of the news release thing, I'm talking about within the day. You're looking to flip it. You're looking to find a trend and join that. But if you're a little bit more confident in the market, you might sort of swing that for, I'll go anywhere up to sort of, I think 2 months was my EOS trade. And that was a conviction long. And that was sort of at the time where I thought the market had, looking at a few things, the world was fairly bearish at the time as well. Things were selling off and, commitment of traders, everything was showing that we're at the downside, and it sort of stopped selling off aggressively. So I thought this is probably a safe spot to start swinging something you believe in.
But just as a general rule, so if I can summarize what you're saying, so to start with, you want to have a bias of the overall market trend. So before you look to, it's no good trying to long a stock for a day if the market's in a downtrend, in your opinion.
Yeah, fully. Yeah. And a good thing to sort of look at within those trends is if it's in a downtrend recently, has it sort of sold down for 2 or 3 days? Because you don't want to be, selling on the 4th day after 3 legs down sort of thing. It's just, you look at the data, you look at the charts, it's the chance of follow through is pretty little. So you're sort of trying to join that trend in spots that you find that you might have a reasonable amount of midpoint as opposed to extension.
Mm-hmm.
Yeah.
And sorry, Chokes, one last thing. Do you is it the small end of the market or the liquidity of the kind of larger names, or?
Well, this is the thing, and this is sort of where I trip up, and I think I've got to develop this part as a trader, because if I look back on my last couple of years, I think most of the gains have been towards in the smaller end of the market. But I think I've been pretty fixated on trading shorter term day trades, on larger cap stocks, just because it's a bit more exciting. And being at that point now, I guess that's sort of where I've moved into trying to move towards indices, because I realized that there's not as much movement in a lot of these large caps. They tend to mean revert. But you get the right news announcement and you get the right market modality, and maybe these things will move. Does that sort of answer it?
Yeah, absolutely.
I mean,
I was
I don't know. I'm trying to work all that out myself here,
Mm,
and it's an ongoing development.
yeah.
I was quite similar to you, where I sort of took trading more seriously through COVID, and upon reflection, it almost, in terms of longevity of a trader, would have been the worst time to be in the market, because you make quick cash and then suddenly the tap turns off and you're left with an edge that was only there when the market's going up, and we're in this range bound market and opportunities are a lot harder to come by. I was trading swing setups, Kolamagi style as well, with those 10-20 day moving averages with I guess you got the wind on your back. You're taking the strongest stocks on the market on the assumption that they continue to be strong. What was it like for you coming out of that period, and where was the realization that what we had is now gone, and what was that pivot like?
Well, I mean, it kicked my ass, I'll be honest. Going from that sort of early massive bull run of just buying zip pay and afterpay and thinking that you had your place in the market, to that not working was not something that I realized really quickly. It probably took me a year of just chopping and churning. And that's what separates the pros, I think, is that they can see that. They can say, okay, like it's changed now. I don't think that you can skip that tuition. I think everyone I know has sort of dealt with it. And the problem with that is that you bounce around strategies at that point. You go, okay, so the breaking news isn't working. Like I'll move into small caps or whatever it is. Chances are, by the time small cap market occurs and you realize it's probably cooled off a bit too. So the short answer was, it was difficult. It was really difficult, and I still am on that journey of trying to work out when things shift. I think is it a small cap market? Is it is it a large cap market? Is it even worth trading at the moment, really? One thing that I've sort of been doing this year a lot more is, instead of trying to decide where the action is, I'll pull up a bunch of different screens on Spark for sort of different denomination stocks, and I'll just scan for large trades in every single denomination, whether it be a small cap or a large cap, and you'll see one of them sort of flash a lot more. And what that serves is a good spot to know where the action is occurring, and you sort of get a feel for it. So I think maybe like 3 or 4 weeks ago, the sort of small cap market kicked off, and you see these trade scanners just light up, and you've got things kicking off. You got a bunch of different trades in that space, and that's where the action is. The action at the moment, it seems to be in lithium. Everyone's sort of paying attention to lithium and coal. And if you're scanning for trades and you keep an eye out for those sort of bigger parcels that are flashing off, you might be able to pick on that a little bit sooner, which is so that's kind of been my solution to that, in spotting where the action is just having trade scans popping up, and they can point you in the right direction.
Sorry, mate, what do you use for that? Was it Spark?
Yes, this is Spark, yeah.
Okay.
Which is sort of your ASX go-to software. It's pretty amazing because you can see the book. I mean, I actually don't think anyone's spoken about it on this podcast before, but you can see where bids and offers line up, and you can see where they execute, how much passive versus active trading is occurring, if it's happening on the bid or the offer, and that sort of gives you a little bit of a read, particularly in the small cap space, of where things are occurring.
So that's reading the tape when you refer to that?
Reading the tape, yeah.
Yeah. So can we do it on this, or have you got a
We
screen?
can't.
No.
No.
Okay. All right.
Oh, look,
So
it's going great. My FMG YOLO short is going well.
Well, I was going to say, so what are you thinking now, mate? Where's your, if this was a real trade, where would you be looking for to manage your risk? Where would you be looking to stop out, above the high or a certain time, or?
Yep. I probably have both a time stop and a movement stop. If this thing's moved sort of more than 80% of what it normally moves in a day, I'm looking at trimming down and monitoring for if it's over. And the other thing is, generally at 11 a.m. it's probably over as well. So I sort of have a time stop on that one, where if it hits 11 a.m. Another error I made early in the picture is I'd have a good trade on, I'd be in profit, and I'd be like, look, I'm right. I'll go out for coffee, and you pop out at 11 a.m. and it just goes straight back against you. It's that mean reversion hour. So I learned the hard way just to, if things are going really well at 11 a.m., fully chop it.
Yeah.
Yeah.
And mate, just with the tail of the tape again, can you talk?
Yeah.
Unfortunately, we can't pull it up here, but tell us what you're looking for there.
Yeah. Okay. This is interesting because I think a good tape setup often appears counterintuitive. When I got into this, I thought that if I could solve the tape, I might be able to, make it. And it's a lot more overvalued, I think, than it should be. I think that underneath it, you want to have a reason to buy. You want to say, okay, this thing's been showing relative strength the last few days. The chart's looking good. Maybe there's recent news. But as far as the tape component, I guess what you're looking at is where there's a lot of liquidity. And I think it reflects general dynamics. So let's say that you're creeping up to a round number where there's big offers stacked and they've been sitting there for weeks. Well, what those big offers are telling you is that, we've been around for a while. We know that this stock is probably worth more than what it is. And I'm not really scared to stack that. I'm not scared to spook the market. So when you see something moving up to a point of bulk liquidity in the market, you sort of think, okay, these people have been around for a while. They're not just going to freak out and dump on the market and spook the price action. But you also know that it's a good spot if there's a large fund or someone that's larger that wants to get in. So you sort of tend to see it gravitate towards points in the tape where there's big lines. If there's actually
what are you looking for if you're on, say, the long side?
If I'm on the long side, what I'd ideally like to see is like a bunch of stacked offers, and I'd like to see bids moving up more aggressively towards the stacked offer. So I guess it reflects if you're in a line or something, and everyone wants something, you want everyone at the front, you want them scrambling over it. And you sort of don't want them sitting back saying, I'm going to wait for this to be on sale. So when you see that reflected in the tape and you see a bunch lining up right before price action, you can sort of have a little bit of confirmation that this thing's probably on your side. Does that sort of answer it?
Yeah, it does. Beau, I don't know if your fan's just turned on. Do you mind just switching that off for audio quality? My bad.
Absolutely, which is good news because my power's back on now. So.
Oh, perfect. Well, that's good. That's funny. Mate, on tape reading, you and I have done a bit of work together. We were on a similar trade together earlier in the year. I've essentially adopted one of the conviction sort of plays out of that, but just still honing in on the tape reading element of that. Talk to me about one, bots, and then two, just delving further into where pools of liquidity may lie in the tape and how action essentially goes to meet those different points in the tape so that, larger parcels can get filled.
Yeah. Okay. Well, I guess there was a time where I came in and I was like, where's the bot? Where's the stock with the bot? I think, a few people wonder that. They're like, oh, the bots are on this stock. The bots are on every stock, The whole thing's a bot game.
Yes, yeah.
So, I think if you see a little bit of funny action in the tape, you see a bunch of orders trigger very quickly, you can definitely read into that a little too deep.
Yes.
Yeah, I mean, that's a huge problem. And that was my problem too, is you look at it and you'd be like, oh my God, like, look at this, that fired off within milliseconds of each other. And, this, but yeah, I mean, I think it just reflects, when you get bot action, it reflects how traders would be, but just a lot quicker, If you see
it's a good question because I'm just reading Flash Boys, sorry, at the moment.
Yeah, I've read that.
High
Great
frequency. Book. Yeah, so it's a poignant question in terms of they're obviously front running orders or putting little drips in the market to kind of try and identify when buyers come in the market. So, and I guess that's why, you know, I don't trade equities anymore, but it seems like a little bit of a turn off to me. And you hear a lot of kind of experienced traders say that it's tough for retail traders because there is, you know, so much algo activity, etc., in equities and, you know, individual equities. And I guess, you know, from a futures side of things, it's obviously a deeper, more liquid market that happens, of course. But yeah, you don't. It's not so specific.
Yeah, and the thing is with futures, I think there's a bit more pressure on it. You know, if something is where it shouldn't be, you sort of rest assured that a lot of people are going to think that too. Whereas with equities, you know, sometimes I don't know if you ever look on Spark Churgers, but at 7 p.m. at night, sort of all the bids pull and all the offers pull, and you thought that you're in a stock that had, you know, I don't know, 20K on either side volume. And then all of a sudden the market makers pull or whoever's facilitating trade decide to, you know, cancel for the day and reload the next. And you go, oh my God, like they were just skating the half pipe, you know, they were just going between prices and I was reading it going, oh my God, like, is this the buy signal? Yeah.
Yeah. It's probably a
But
really good opportunity to transition into how technology and how you use technology in your trading now that we're sort of going down that rabbit hole of technology being used more actively in the market. How are you using tech to enhance your trading either through execution or analysis? Where does that come in?
yeah, okay. Well, so the first thing is sort of having good Spark scanners on. So, you know, if something's got a news announcement, you want to see what a news announcement has got sort of the most volume executing, relative volume. That's a good one, a relative volume scan. I reckon you should have trade scanners if you're in the small cap space to keep an eye on where the action is. I also like to go through hot copper, and I don't think that many opinions on hot copper are worth looking at, but I do think that utilizing being able to sort what has the most comments or the most views on a news announcement is also pretty handy. And yeah, exactly. So it's not necessarily about building an opinion on what other people think. It's just knowing where the puck is and going to the puck. Um, yeah, and then I guess where I've taken a leaf out of Marto's book is I've sort of been exporting data from TradingView, particularly on these days where not much is happening and you've got a large cap stock. Um, and I've got a certain amount of technical indicators that I export. So one of them is the 3-day RSI on the rate of change, which is something that I stole from Linda Rashke, who's a bit of a trading legend. She had a book called Street Smarts, and they were just talking about how they trade equities. But you know, the point is that I'm just getting a bunch of different indicators that I think might be worthwhile. So one of them is, you know, where the 5 and 10-day moving average is. One of them is how far it's gapped up. One of them is the 3-day rate of change. And I'm just looking at where something's opened and sort of filtering for something that resembles that. So, you know, if it's open at 1% and yesterday was a trend down day and the 3-day rate of change is to the lower bands, the moving averages are moving up. I mean, how does this normally perform? And yeah, that's sort of been a bit of a game changer as far as knowing when to expect either a trend or mean reversion. If you can decipher those two, I think you'll do a lot better. At least I have.
So you export data from TradingView.
Yeah.
Then what do you do with it? With obviously all those indicators, but what do you do with it then? What's your process?
So I'll have like Excel formulas. Maybe I have 5 different. I don't know if I would recommend looking at Marto's spreadsheet for anyone that's watching. I'm sure most people have, but
Stop
yeah,
plugging him, mate.
yeah. No, I got to say thank you, but yeah, you know, I'll basically paste 5 columns or so of something similar to what Marto's doing, but for my indicators, and then I'll just filter it. I'll just look at the market. I'll say, okay, this is up, you know, 0.5%. yesterday was a red day, and this is the 3-day rate of change, and our moving averages are here. What can I expect? And it's all pretty simple. I mean, one of the things that I thought was really daunting is how can I get quantitative data while not being a programmer? And I've just sort of seen that you can do that in Excel pretty easily if you know how to equals B2 minus C2 formulas. It's not rocket science.
Yeah, yeah.
And
And to
once
not plug Mardo, but I have had a similar discovery where it isn't actually rocket science to sort of create and execute trading strategies using numerical data and data sets. It is just a matter of plugging stuff into Excel. Financial markets are so amazing because there is such a variety and large scale amount of free data available. And yeah, all you need is an Excel book and the ability to match some cells and stuff, and you can get actual real insight rather than, you might see something and go, oh, I wonder if that has any real rhyme or cause for that happening. And you can actually go back and just check it in Excel, and it's not rocket science.
Mm.
And I think that's really daunting I know it is for me when I look at, the algo traders and whatever that we know. I'd love to have that kind of expertise. So yeah, I guess what I'm trying to do and what you guys are trying to do with, some pretty simple data in Excel is just have a kind of a step between those two being completely naive about, how certain things happened in the past. And then, yeah, as you said, Beau, not having the full programming experience.
Yeah, and that's the thing about, I've experimented a lot with writing strategies, like trying to write mechanical strategies. And I guess the thing that you manage to avoid is you can very quickly classify what kind of day it is. So you know what sort of strategy to deploy, as opposed to if you're always running a mean reversion and directional strategy, your drawdown is going to be a lot more.
Yeah, no, for sure. And I think, if you are a trader out there who has had a good run during COVID and maybe you're still struggling a little bit, data, your success sort of lies in the work that you're willing to do. And I mean, you're trying to get into that next tier, and by avoiding going that data and that quantitative approach, even though you see so many successful traders around you using it,
Mm.
you're gatekeeping yourself from essentially what could be. It's not a tough thing to get any sort of benefit from.
I mean,
Yeah.
just sorry to cut in, but so you use TradingView, but you can also outsource. I know I've outsourced some of this data
Yeah.
to the Philippines and
So have I.
different areas at different stages. So yeah, I mean, it's not. Yeah, even if you're not you don't kind of rate yourself in Excel, like it's not that hard to jump on Upwork and pay someone $5 an hour to kind of data entry for you if you're kind of interested in that thing and think it could be worthwhile.
Well, you're absolutely right, and that's something I did. You can get broker data for the ASX, so you can see which brokers are buying what.
That's from FN Arena.
No, this is actually so FN Arena does if say a bank has upgraded a stock,
Okay.
but Bloomberg and day trade scans, I don't have Bloomberg, but we use day trade scans. You can export who's been buying. Anyway, the reason I'm saying this is because I got someone overseas to build. You can basically export what each broker is doing, but it's very hard to combine them together and sort of use it as a sentiment indicator. So I had someone that could pull every single broker and what they're doing, and then put it all into a spreadsheet so that I can sort it from how many brokers are long to how many brokers are short. And the whole thing cost me like $80. I didn't have a clue what to do. If you get the right guy, man, you can do a lot.
That's brilliant. Yeah.
Yeah. That was part of the EOS trade, actually. Just on that one, that one of the things, as far as a broking standpoint, it had the most selling out of any stock on the ASX. So the most universal brokers selling. So there was sort of a mean reversion there going, okay, if everyone thinks that this thing's done and it's got another wind in it, then it's probably going to get a little bit closer to book value. Yeah.
So I think we're going to touch on that Churgs, aren't we? Can I just are we halfway, Churgs? What's the what are you thinking? What are you how are you liking your
I'm
trade
loving
here,
it.
Beau?
I like it. I think I'm gonna, yeah, I'll probably chisel out just a little bit now. But I'm gonna stick by my 11 a.m. stop as well. So I might just hold on to the remaining 1,500 shares short, and come 11 a.m. when the morning drive is generally, getting exhausted, I'll chop it.
Put
It's done.
you
It's done.
you'll close it. You'll close it, or you put the stop above the high or something.
Yeah, I'll close it, I think.
You'll
Yeah.
close it. Yeah. Okay.
Um,
And just on taking profit, so you've kind of taken bits along the way. Is that normally you think that's the best strategy?
yeah, I think it's, yeah. Yeah, normally,
As you said, mate, you only need to be burnt a few times where you've held on, hoping for that 50-point move, and it's come back to kind of appreciate that you need to take bits along the way. In my
yeah,
opinion.
absolutely. And I mean, part of the reason I'm taking profits is because, I mean, if you look at this, you look at its range throughout the days recently. I mean, this is getting right up on the edge there of how far this thing moves. Just eyeballing it. I don't have my tools here, but it probably would be a little bit greedy to presume that we're going to get a sink down to here or something.
So you, when you do trade, you might rely on the ADR or the ATR, the average daily range or true range there for a stock to sort of understand when you are getting to the maximum expectancy on a
Yeah,
day move.
yeah,
Yep.
definitely.
Yeah.
Yeah, I'm out way before the average daily range, unless there's like an event where some news has got the stock offside. In a situation like that, you can presume that everyone's panicking, and you can sort of throw that out and just know that you're gonna have an extended move. But yeah, like if you're just trading the chop like I am today, where there's no significant news catalyst, yeah, you better get out nice and quick. Get out quick. Don't overstay welcome. Yeah.
Yes. Yeah. No, that's great. Let's get on to this EOS trade. It's something that we've alluded to several times throughout the interview, but it's probably just important to know that we're going to be presenting this. You and I were both sort of trading EOS for a while there. It is an ASX defense stock. It used to be I guess, a market darling of the defense industry, and
Mm.
it very much fell off. Can you give me a little bit of context pre-trade around the company, and then around how you first discovered the opportunity for the trade?
Yeah. Okay. Well, it was a market darling. They specialize in defense products, so they've got anti-drone mounting solutions, which I think is, as I feel weird about it because I'm really not so for war or anything, but just looking at this stock itself, it was an opportunity based on the company's sort of valuation and positioning in the market. I don't necessarily think that we should be investing in things that can cause damage, but this was an anti-drone move that they'd been working on, and that's sort of the future of warfare is these remote control drones and aircraft and things like that. They got a pretty good system. They're in with the Australian Defence. They got a good book value. They also specialize in satellite and laser. They've got a division for that, which I believe they've since put on hold. But they've also alluded the whole time that they're talking to the government about reinstating that for a pretty significant project. I also knew that they had a few tenders in with some of the defense primes, some of the big companies you've probably heard of, and they're all sort of public tenders that they've released or they've put in a back page of their news announcements. But you sort of have to read between the lines. They're not going to put it as the title. So that this thing's sort of got some projects in the works. And I think the first time it really came up on my scans was when I was doing broker data. I was just looking at what was most universally sold by most brokers, and I think it was like maybe like number 4 or something. And the top 3 were just you do not want to be in them. Like had no history of being good in the market or anything. And so yeah, I saw that, and then I think it was the CEO left, and it sort of failed to move down. At the same time, you've got Ukraine kicking off, and we're as Australia, we're pretty involved in NATO and that side of things. And soon enough, they announced, to my surprise, actually, that they were selling some of the drone defense mounts. Oh, sorry, I forgot to mention as well. They had deals where for further tank production, some of their equipment would be mounted on the top of the tanks too. So sort of all that made you think, all right, they've got contracts in the works. They just need to spin this around and sort out their cash burn and whatnot. And it was a bet on survival. If they survive, they're probably going to be worth something. If they don't, then that's that. But this is the opportunity right here. So the CEO left, and Price didn't really mind it. It sort of didn't sell off, and that's when I started to nibble a little bit. I was like, all right, this is a classic. There's a guy called Jason Shapiro that I follow, and he just measures sentiment. And when everyone thinks that something is a buy or a short in sentiment, that's sort of where he is, because he plays that mean reversion for when people look back and go, oh, maybe this is something. So it was that moment where a news release happened that was potentially bearish, and the market was like, oh, it's probably pretty good. So I took a nibble. I believe around that time they spoke about deals with Ukraine to provide drone defense systems, and we got a bit of a spike up there. It consolidated for maybe 10 to 20 days, and it was just a classic Kualamagi style breakout, really, where this thing's pumped significantly to the upside, and your 10 and 20 day moving average are coming up and forming a bit of support. I think I was also looking at anchored VWAP since the CEO left. I was like, where's the average position here? And sure enough, when they all sort of move synergistically, when you've got the average price, the average buyer meeting where it had gapped up, and you got the 10 and 20 day moving average giving pressure, and you've got book value way higher. I think it was around 70 cents at that point. Book value had been measured sort of, $1.20, $1.30 if this thing pulls through, which, you never know if it will. And that's when you sort of go, all right, well, if this thing's going to move, it's going to be here. So I think I hit in way bigger than I should have, and it paid off. So that was nice.
There's a few probably takeaways from what you've just said there. The first one is, you could have kept it as simple as I was scanning for Kualamagi setups and disappeared, and I took the long side and it broke out. But what you really did is you understood the stock, you understood the narrative, you understood that CEO departures usually, for better or for worse, move price. This time it didn't. So the I guess the people who had the float of the stock were content holding where it was. So you got a lot more perspective than just a couple of days of consolidation on the chart. It seems like you really understood this stock deeper than that. And do you think that really contributed to the conviction and the payoff?
Yeah, I mean, I was going to the extent of sitting in on the webinars, listening to what they had to say. As far as sellers, like it looked like it was going to bounce for a year, and it would hit lows, it would start to form a base, and I think I'm pretty sure it was like the all-time VWAP or something. It was like well and truly beneath it, and it had shaken 5 or 10 times underneath it, and you just think, who's left to sell after the last year? It was brutal. I even was browsing hot copper. Everyone was calling for the bounce, a year before this point. And like everyone had given up. Like there was not even a whisper of EOS. Like there was maybe like one or two people commenting, being like, oh, maybe there's a contract in a year or something. So yeah.
What was the entry and exit on that one, roughly?
Off the top of my head, it was, so I started nibbling around that 45 to 50 cents, just little parcels. And then when it bounced up to that 70 to 75 cent range, that's when I waited for that confirmation. and I hit in pretty heavily around that 73% mark or something like that. 73 cents. Yeah.
Yeah. And where did it finish? Where do you, were you still
The,
holding or?
the high, no, I'm not still holding. The high was 130. I didn't get that. I think I chopped $1.10 to $1.15. But that was most of my position, and that was sort of enough to pay me. And then I think I swung maybe just less than a quarter for a little bit longer, and gave a bit back on that, and that was unfortunate, but we can't always nail the top or bottom. So I stopped
Yeah, nice.
that last quarter out at around like a 90 cents to $1 sort of thing, which was
Brilliant. What a trade, mate. Well done.
yeah, it's good.
So because you had that conviction, did you size up compared to other trades that you'd previously taken?
Yeah, absolutely. I thought
Okay.
it was the trade of the year, and I wanted to make my year on it.
Okay.
That's sort of what I thought. I was like, okay, I've never seen so many factors line up like this before.
Yeah.
So like I need to be uncomfortable in this at least.
Yeah, that's an interesting kind of line of thought that is for another day. But you've got kind of the Soros theory that you wait for those moments and then you kind of put everything on the line for them, or do you just kind of do bits and pieces across diversify across a lot of different areas? But it obviously when you're so convinced in that case, it paid off.
Yeah, and there's been a few cases where I wouldn't say I'd ever had the same level of conviction, but there has been situations where it doesn't pay off, and that's the thing. Market doesn't care how good you think a trade is, and as time goes on, just going on what you said, Marto. I mean, I find myself wanting to be more risk averse, and who knows? Maybe in a few years, I'll look back on that trade and be like, "Wow, that was maybe reckless," but at the time, it looked right, and I'd never seen anything like it. So.
Yeah, nice. And mate, just quickly, you mentioned hot copper there. What in terms of kind of social or communities that you're in, whether it's Twitter, Discord, what do you find them beneficial for? What don't you find them disadvantageous in terms of?
Yeah, that's a good question. I mean, I've just found more often than not that whoever I thought was doing well, maybe wasn't. Like you join these hot copper, or you join Discord, and you think someone sort of got it. And I don't know, have you had a similar experience?
Yeah, I'd probably say that the most impressive guys that I've met in real life are probably generally the quieter ones. They're definitely not out there beating their chest. It's a great tip.
Definitely. And I would say, yeah, so on hot copper, I probably wouldn't use it to trade, to be honest. I mean, I don't think there's a lot of people there that are having a bit of fun. There's a few things, I think it's worth keeping an eye on, like if there's potentially an upcoming cap raise, you might want to scroll through hot copper and see if you can spot someone talking about that or something like that. But yeah, I wouldn't trade on it. It's just sort of knowing where the puck is and where people are looking. I'll give an example of that actually. IMU, which is a recent runner on hot copper. I think that was must be the most talked about stock of the year, and this thing had just been beaten down in a downtrend for forever. And it was on hot copper. It was like it was only good things, right? You were reading, and so yeah, I guess you're watching this thing knowing there's a lot of eyes on it and there's a lot of bullishness, and you can sort of know that if this thing turns, it's not going to be just you watching it. There should be like a lot of money piling in behind that if they've got a worthwhile announcement, and everyone stays bullish, and so you're sort of just using it as a social metric, I'd say. And as for Discord,
Yeah.
do you want to elaborate on that one?
Yeah, on hot copper, I've spent time in there, and you very quickly understand that using it as almost like a contrarian sentiment indicator, as you did, is pretty much the only good use for that platform. It's pretty much engineered and to the point where unless you're putting something positive about a company, you're not getting engagement through likes, which is the metric that pushes posts to the top. you're not getting feedback from other people, you're not getting any sort of good discussion about a stock unless you are singing its praises. So you have to understand the echo chamber that it's in, and in a world where biases are so strong, and can affect so many decisions where money's on the line. It is just an echo chamber for that. Which, yeah, I think keeping that in mind when you are going down the rabbit holes of hot copper is very, very important. A little less so on Discord, like the ASX day trading chat, for example. I wouldn't I wouldn't listen to what anyone has to say on there, not because they're really good or really bad, but it's, everyone is pushing their own agenda in some way. But what Discord's really good for example, is I've met you, I've met so many other great traders, and it's a really great foundation to understanding more about the community. People are there to bounce questions off each other and things like that, and it's not in a manner that's pushing your agenda to make money down the throats of other people.
Yeah, definitely. And yeah, I mean, the cool thing about some of those groups in Discord is I think a few of us sort of call each other out if something goes wrong, which is nice.
Yes,
Not
yeah,
managing our risk.
yeah, yeah.
But I would say, if I was chatting to someone that's getting into it, like whoever you think is doing well, just double check it, because you might be following someone that's looking a little bit more shinier than they are. But that being said, best traders that I've met have been through Discord. But just do your background checks, really. I mean, yeah.
Yep. Yep. No, that's really good. Mate, how has the EOS trade essentially changed your trading at all? Are you now looking for those higher conviction players to go again? Or do you still trade day to day, and then should the year maker trade come along, you then direct all your attention to that? Like, how's it formed trading for you?
I reckon it's had the adverse effect. Like, I don't want more of it. I want less of it. The whole thing was terrifying. Like, just to be, big in a stock where it's I think when it was moving, right, there was a point where if I hit out, like, I'd move it like 5 or 6 cents, and you'd see this thing tick down and your heart would flutter a little bit. And uh, you know, plenty of times I just had to go for a walk. And yeah, if anything, it's sort of pushed me the other direction. And I need to disclose that I went in for a second time recently on EOS, and wasn't the same size. I was a lot smaller, but enough to feel it. And it didn't work out. They announced they're in a dispute with their lender, and the stock price tanked, and that did me a bit of damage, and that was a bit unfortunate. Thankfully, I still have a lot of my profits, but certainly did a big chip in the account. So yeah, just from that whole experience, I sort of want to move the other way into just more bite-sized little trades where you're not holding overnight. You're not, wondering if something's going to happen, some news is going to hit the market. It's had the opposite effect. I'd love to have those conviction trades, but I don't think they come very often. And even when they do, it's a lot more stressful than just taking little nibbles.
And I want to hit on just the psychological bit that you mentioned there in a sec. But we're at 11 o'clock your time.
Ooh.
Is this closeout time or?
It is definitely closeout time. Thank you, Martin. And what I will say also is I've just noticed that FMG here has gotten trapped in the black hole of a round number, which is an all too common occurrence. And had I seen that before, maybe I would treat it differently. I don't know, but you do see these large cap stocks. They tend to stay. How much have I got left here? 1,000. I'll just close this. Sorry. They tend to just get stuck in a black hole at a round number. Same with futures. Yeah.
Well, I wouldn't say trap, but support and resistance. Obviously, just simple supply demand. People like the nice round numbers to put buys and sells around. But definitely something to keep an eye on.
Yeah, definitely.
And so just quickly, mate, how do you when it was dropping a few cents at a time, any kind of advice you can give to people that are on the wrong side of a trade?
Yeah, I would say don't look at it like don't don't be naive and not have a plan for when it goes wrong, obviously. Um, but if you can set an alert and let it be, I mean, the money's made in waiting. You're not gonna make more because you saw a tick, you know. Check it, you know, every few hours and have a look at the tape, see if anything interesting has happened. But yeah, I'd say just make sure you get your alerts right and then go and live your life. I didn't do that, and that was a mistake. Yeah.
Marto and I have both seen your sort of daily results. We post them in a Discord channel together, and they're often quite consistent. You keep your losses small, you keep your wins. You know, they're all sort of very consistent, and they're not massive either way. They're very disciplined. How have you developed that side? Was that mental side something that came naturally to you? How have you developed that? Yeah, talk to me on your mental frameworks.
Yeah, okay. I mean, I guess the real question here is just position sizing is what that comes down to. And yeah, probably based on comfort is a good thing to do, I'd say, like when you're starting, because um, the second that you really feel it, you start to do weird things. You start to you know, second guess every tick and things like that. So probably going into every trade and having an idea of where the point of discomfort is, where it starts to affect you. So you know, you might say it's a dollar amount, maybe $500 affects you, maybe it's $100, but if you can start somewhere and then just put it into a spreadsheet, and you know, if you're doing well, you grow that, then that's a good basis. And then the other thing is, you know, if something's beneath VWAP and it's, you know, it's sitting there offside for a while, like it's probably not coming back. So I'm pretty quick to get rid of anything that's not going my way. I'm super cautious. If something's moving my way, I'm skeptic. So yeah, I'd say that's probably what you're seeing is just me chopping a position pretty quickly if it doesn't work, and also just having a baseline dollar amount when I go in based on where I'm at. And if it starts to move up on that dollar amount, then you know I'll know that okay, this thing has moved offside and it's probably not coming back, so I'll chop it. It's just risk management. I'd say the consistency side is it's all risk management. It's not really that predictive. Of course, you want to have an idea of what you think the index is doing, and you know what the stock's doing based on the last few days of price action. But at the end of the day, like you know, you can't control the market, so it's just make sure you chop anything that's not working. Standard advice, really.
Yeah, good, good. The next thing I really want to get into with you is you ask very, very good questions um, in voice channels or chat channels when I see you interact with other people in the community, but you've got a very good um, basis of learning around the markets. What are the resources that you've had in your trading journey that have really stood out to you as beneficial in
Yeah,
terms of books, people, exercises, whatever it may be?
I got to flip that on you. You're excellent at asking questions. You've come into this podcast, and I remember watching your first podcast. I was like, man, this guy's done this before or something. Wow.
It's because
Um,
I don't know anything. I just need to
that's it,
understand
right?
what's going on. Yeah.
That's literally it. I mean, if you can accept that you know nothing and that you're wrong all the time, you're probably going to have that motivation to ask questions, right? And if you're actively trading, you'll remember very often that you know nothing. So,
Yeah, yeah, yeah. But
but
you've given me some good books to read and stuff. So yeah, what can you impart on those at various levels of their trading journey that you think
yeah.
really helped you?
Well, okay, so what's been instrumental for me, and this is part of the reason that I gave you that book, Mind Over Markets. I can't take credit for that. I mean, that's not my wisdom, but I thought I'd pass that on because there's a fella that I had a bit to do with, very knowledgeable guy who was happy enough to share his knowledge with me. He sent me that book and he said it's everything that I've known about markets, everything I've used to make money. And I think you were interested in sort of the futures in the large cap space, so I pushed that through. But that was a gentleman that I met through a Discord group. He had some mutual friends, and He's since retired. I don't know if you know what I'm talking about. We might leave names out.
Yeah.
Yeah,
No,
he's
we'll leave names out, but he's a very successful trader, and he's also someone who's since retiring has a lot of time for a lot of other traders. Yeah,
what a guy, hey? What a nice guy. Yeah. And yeah, like if just to give anyone listening an overview of you know, his level of success in the futures market, I think I asked him one day, I said, you know, what's an average day look like for you? And he measured it in liters of jet fuel. So he's and that's because he purchases jet fuel. So there you go.
yeah, yeah. So
Yeah.
you gave me Mind Over Markets by Jim Dalton. That was a really good read for those wanting to get into sort of futures and understanding market structure and stuff. You also touched on Jason Shapiro from Unknown Market Wizards.
Yeah.
Is that another book that you read and you got a lot out of?
Yeah, for sure. I mean, the Market Wizards series is you can't go wrong with that. Linda Rajki, you know, I think I took a leaf out of her book with her Street Smarts book, which is a bit older now, but has some concepts there. Um, what else? I mean, I have a hard drive of I think 850 trading books, and I just go through like, you know, whenever I get a spare second on the computer, I'm just reading it. But I think those names stick out the most. Yeah.
Yep.
Who else do I look at?
The other one would be terms of traders. You know, you mentioned Chase, Fabio, um, Austin out of Sydney. They obviously in the glory days would post their daily P&Ls. Talk to me about how you use those and if there's anyone still around that does that sort of thing.
Yep. I'll also plug Alan McGrath from Traders Edge. He has been him and his group. I was in that for quite a while, and yeah, he's really happy to answer questions, and I think he's great. There's another guy in Bali I went and visited, who's not trading anymore. That was fantastic. But yeah, I think it's when I talk about Nick Fabrio and Bryce's P&Ls and when they post. Dear God, I don't know how they pull the rabbits out of the hat. They're so good. I
They
can't
are,
say
they
that I've
are.
worked it out, you know, like I used to every day when Nick would post his Twitter P&L and you know he'd something had moved 3 cents and he'd milked it for, you know, 5K, and I just cannot say that I have any read on how that guy is doing so well. I mean, props to him, amazing.
Yep. Mate, that concludes your hour.
What's that?
That concludes your hour of trading.
Fantastic.
I think your pocket is that right? I thought you pocketed more than 592.
Looks
Just click on the arrow at the top right there of the screen.
just here.
Yeah.
Yeah.
No? Okay. We'll have to go back and double check that.
We'll do the instant replay, but I'll take it as it is. $592 profit. That puts you in third place. So we've got obviously Marto still at number one, and then
Marto.
he's still got it. No one's dethroned him yet,
I
but
heard
mate, well done.
I think you said to Dan Nolan that you think there was a little bit of strategy here in Marto's timing.
Yeah, listen, I'll purely talk behind his back on that. He wasn't on the podcast, so
It's all legal, mate. All legal. I just was selective in when I traded. That's all.
It's good.
Yep.
Nailed it.
Yep.
Mate, I know Chokes, you might have something before we wrap up, but before we do, I want to hear from you, mate. I want to know about cliff jumping or cliff diving. Which I thought was pretty unique. And if you survive that, what the next kind of few years look like in terms of goals and where you want to be.
Okay. So cliff jumping has just been something that I guess I grew up with. We grew up by the river and we just go down and try a few flips, and we all had trampolines. And it's just been a natural extension. And right now, actually, as this has been recorded, we've got our first ever Australian cliff jump tour, which is going on. So we've got about 20 or 30 people that are traveling from down like Wollongong area up to Newcastle. And man, these guys are world class. I mean, I'm like, you know, I'm not great compared to some of these guys, and they're 17. They're amazing. They're doing triple flips off 25 meters, and it's quite a blast. So yeah, that's something that we do in summer, and just a lot of fun. It's I guess in some ways it's similar to trading. You learn to deal with your head a bit when you're standing on something pretty high.
Yeah.
What's involved in the cliff jumping? Like, do you just find somewhere, find an edge and just jump and hope? Or like, what makes a good cliff jumper? What draws you towards it? Like, just tell me more about it.
Yeah,
Yeah.
cool. All right, so a lot of it's acrobatics, so we're all trialing
Okay.
things into a foam pit or on a trampoline, something like that. And then, at a certain point, trampoline doesn't go that high and the ground's pretty hard. So you change it up a bit and you try and do it into the water. And, we've got a pretty good map. I think we've all collaborated on building a map around Australia of spots that are reasonably safe to jump and deep enough. And you'll go there with a few lads and you'll dive down, see if it's deep enough, and then normally if it's higher, you'll have a few people in the water just down below checking that everything's okay for when you land. And yeah, you'll go and you'll do your flips and you'll try and not do anything too out of your comfort zone. It probably looks pretty wild in the videos, but a lot of these guys are pretty serious in their training. I mean, a lot of them are competing on the world stage for trampoline and things like that. So
It
and
kind of I was just going to say, it kind of the first thing that came to mind when I was trying to think about how it relates to trading, and you kind of alluded to it, is like the one thing that I've seen, I reckon, over the last 6 months in terms of people that I deal with. Like, I think the biggest issue, if I had to pick one, is like that loss aversion kind of mindset that people have in terms of how they have done studies, and people are they do anything to get out of making a loss, even if they're offered much greater profits. And I definitely see that a lot, whether, it's people that don't want to pay for something that could give them a significant, benefit, or, entering a trade. They're worried about, their downside without fully kind of getting their risk management together or whatever. So yeah, it's probably a good point that, you've got to, you make that jump literally, and it's you got to have a strategy to get that mind over matter.
And I'm not the only trader in that group. I mean, you nailed it. I think those guys are pretty good at taking risks. So yeah, there's another fellow that I jump with that's fairly into the crypto space, and he's done very well for himself on a few of those trades there. And that's it. I mean, he's just comfortable taking risk.
If I ever catch up with you in person, can you take me to a cliff? And I won't do any acrobatics, but I'd love just to jump. Is that something that you can do?
Oh
You just be
yeah,
like,
yeah,
"Oh my God."
absolutely. Yep.
Okay,
You let
that's
me
pretty
know.
cool.
Even on the
Be looking
Gold
for a new co-host after
Coast.
Mate,
There's
after putting up with you, I won't even want any water underneath. All right.
that.
there's some good spots on the Gold Coast and up in Brizzy, so we can make that happen.
Not cool. Yeah, nice. Yeah, so Marto asked at the back of that cliff jumping question. What's next for you over the next 6 months to 5 years, 10, 20 years? What's going on? Where do you want to be?
Well, at the moment, I'm not a full-time trader. I'm a part-time trader, and I wouldn't say that I could live off full-time trading. So yeah, I would like to move into that. I would like to scale a bit more. I also have the real estate photography business that I do with my partner, and that's going pretty well. I think I'm at a point in things where if I can just gradually increase those two projects, I still feel like I have capacity to do more real estate shoots throughout the day. And I also think that I have capacity to increase, the trading sizes and consistency and, work a little bit more to be quantitative, a little bit more Excel spreadsheet based. I guess that's the focus at the moment. It's how can I be more consistent in a quantitative way with trading and increase my sizing, and how can I just pack on a few more clients and with the real estate media, and also keep expenses nice and low so that I can have a good chunk of time where I'm just doing what I love, which is it's good. I'm lucky, I'm lucky to be able to call my schedule, and if the boys decide to do a cliff jump trip, I can sort of manage that. So it's good.
Yep. One last question. I've probably said this about 3 times, but I'll probably say it 3 more times. You're very fit, active. How much does that play into the mindset for your trading? Does it make a real positive impact?
You know what? I think I struggle with probably having a bit too much go. It's just I I think that when you're training pretty hard, or you're doing things that are adrenaline raising, you sort of you kind of got to come off the throttle more than you got to get on it, and probably that's been a thing, particularly with position sizing for me. If I really like something, I'll jump on that throttle. And so I'd say the fitness training and the things that raise adrenaline. I think a lot of people think it's like a really healthy thing, and it is. It helps you de-stress and it helps you get your mind right and everything. But like, if anything, I think I personally need more meditation and less running and all that sort of go activity.
Yeah, no, that's great. Marto, any parting questions for Beau before we leave it here?
No, we've covered it, mate. Yeah, no, it's interesting, that self-awareness bit as well, with the meditation as opposed to the exercise, mate. So yeah, no, it's been amazing. Great to
Mate,
catch up.
You guys are
where
great.
can people?
Thank you. Yeah, that was really good.
Oh, thank you. Where can people find you if they want to reach out or learn a bit more about you, or say thanks for such a good episode? Like, yeah, is it Twitter, Instagram?
Yeah, probably Instagram if you go backflip Beau. And I would probably say find a better guru if you're going to reach out to me. But yeah, backflip Beau on Instagram if you want to see me jump off things and mess around. And yeah, feel free to ask anything, and I'll do my best to give some answers. But I haven't solved the market, so I'll push you in the right direction as someone who's better than me.
Yeah, no, that's great. Awesome, mate. Thank you so much for your time. Congratulations on currently third place, turning a profit today. Thank you for trading equities. Very much appreciated. And yeah, thank you so much for your time.
Thanks, Jurgens. Appreciate it.
Thanks, Beau. Cheers, mate.
Thanks, Marto. See you
Bye.
later.
Bye, mate.